Good morning, good afternoon, ladies and gentlemen. You're welcome to the FinTech Africa podcast this morning, this afternoon, wherever you are. It's a pleasure to have you with us this time of the day. Without wasting too much time, I'll just give a brief introduction of what our FinTech Africa podcast is. Africa is experiencing a rapid transformation in the financial sector with the rise of FinTech. The continent is experiencing unprecedented growth in mobile phone usage, and this has opened up opportunities for digital financial services. The fintech industry in Africa has become a hub of innovation, with startups revolutionizing traditional financial services. FinTech Podcast is about to explore the latest trends, developments, and future of fintech in Africa. The primary objective is to provide a platform for fintech enthusiasts, experts, and industry leaders to discuss the current and future state of fintech in Africa. This morning, we have with us Mr. Olusegun George, the CEO and co-founder of Jamboro. Mr. Olusegun George, you're welcome to FinTech Podcast this morning.
Thank you, Olu. Good morning and good afternoon, depending on where you're viewing from. Glad to be here, and very excited about this sector in general. So it'll be very good to give some insight into what we're doing and what we're looking forward to. Thank you.
Thank you very much. This morning, our topic for discussion is the benefits and challenges of implementing fintech solutions in SACCOs and cooperatives in Africa. In recent years, fintech has emerged as a game changer in the financial sector, with the potential to revolutionize the way SACCOs and cooperatives operate in Africa. By leveraging the power of technology, SACCOs and cooperatives can improve member services, increase operational efficiency, and promote financial inclusion. However, implementing fintech solutions is not without its challenges, and SACCOs and cooperatives must navigate a complex landscape of technology options, data privacy concerns, and member trust issues. In this podcast today, we'll be exploring these benefits and challenges with experts in the field, discussing best practices for fintech implementation and exploring the future of fintech solutions in SACCOs and cooperatives in Africa. And I'm glad to let you know that Jamboro is on the forefront of leading in this field. Without wasting more time again, I'll be asking Mr. Olusegun George. Can you start by introducing yourself and tell us a bit about Jamboro and your experience of working with SACCOs and cooperatives in Africa?
Sure, it'll be a pleasure. I'm Olusegun George, co-founder and CEO of Jamboro Limited. My background has predominantly been in investment banking and financial services before delving into tech consulting and management consulting as well. I've traveled extensively across Africa, which enabled me to conduct adequate research to talk on this subject matter. And myself and my co-founder, how we divided and conquered across 23 odd countries in Africa, enabled us to gather the relevant information and the feedback that we needed to start our company. Our company is called Jamboro. We operate in about 7 countries in Africa right now, and looking to actually embark on expanding rapidly across 33 countries in Africa. Myself and Moses Onitilo set up the company, and we're old business school and high school buddies, and lived in different parts of the world. He lived in America, I lived in the UK mostly, before moving back to Nigeria. And we've always talked about solutions and what we intend to do for the continent. And basically the subject of financial inclusion came up. And we just realized that there were so many gaps in that market that technology could finally solve. So that's how we began our journey. Our journey is basically going around gathering data, configuring fintech solutions and other solutions, but whether it's the bespoke solutions, off-the-shelf solutions, or white label solutions for co-ops, microfinance institutions of all sizes and all different maturities as well. So in some instances, we actually had some of the SACCOs or the co-ops that have no sense of automation whatsoever. And this was more of a challenge than we thought, but we'll delve into that a bit later. Some of them had basic automation in the form of spreadsheets, and they were easier to deal with in that respect. But the adoption rate is something we're also going to touch on some further down the line in this podcast. Thank you.
Thank you so much, Mr. Shegun George. Thank you for taking us through that. Please, can you tell us what are the advantages of having fintech solutions in cooperatives?
Sure. So the co-ops and the SACCOs, as we see them today, actually began probably centuries ago across the continent in the form of localized savings groups, where in West Africa, for instance, they're better known as Ajos in the Yoruba language, or Esusu, or Susu in some of the other West African states. They've been going on for a while, but they weren't formalized, they weren't regulated, they had their internal kind of administrative hierarchies, but there was nothing really regulated or formalized in that sense. And as these numbers grew over the years, the offerings grew, the demands for better service grew, and basically the admin and the governance around it actually needed to be more formalized. And that's where the SACCOs and the co-ops and what have you came into the forefront. What we do for them in that sense is basically look at their existing practices, and this is what we did as a company. We looked at their existing practices, which were mainly manual, and we took those and configured them into our platform just to give them the comfort that we're not actually changing much in terms of their practices. However, we're making it more efficient, we're making it more accessible and more transparent, and in most cases real time as well. So you do have feedback. What the manual operations were doing back then, it was they were blindsided some of the members. So then crept in the issue of trust. Now, when we're talking about trust, I've been to meetings of some of the localized or the traditional SACCOs or co-ops that we have, and they have an administrator, they have a treasurer, and they have a chairperson who will conduct the meetings on a regular basis, do the collections. The collections were done manually, mostly in cash in some instances. Also, they would read out your balances, and some of them didn't have paybooks or any form of statements. So they would actually come to the meetings and verbally read out your balances. So they'll sit down and tell you, Madam Alayo has 50,000 in her account, Sarah has 20,000 in her account, and that was taken as gospel. However, we found out in some cases that some people have actually had the misfortune of losing their funds. And when I say losing their funds, this so-called administrator would come to the meetings, read out their balances, but not deposit the monies that they were contributing on a regular basis. And when it was further down, investigated down the line, we found out that some of the money had been siphoned or had been absconded with. So those are the dark side of the manual processes. Also, we look at the operational efficiency that surrounds this as well. If you have a SACCO of, say, 10,000 people, 1,000 people, and they were to apply for a loan all at the same time, it will take ages to actually process that paperwork and look at the collateral and what have you. However, with automation, you're able to actually look at an instant credit score and make an instant decision right there and disperse within a short space or period of time. We're also looking at the user experience. Like I mentioned, some of the members were blindsided. Do you want to continue that, and how encouraging is that for you to actually grow your membership if people had trust to worry about? So what we've done is make sure everybody that has access to a phone, it doesn't even have to be a smartphone, it could be a feature phone, and you could actually use that on a USSD basis to actually access your make your contributions, one, and also access your balance on demand. So that's another one. I'd like to also touch on the data and the analytics behind this. So the analytical side of this is able to enhance the decision-making process, also provide more efficiency in that sense, and at the same time, what you're looking at is what can you use for this data. So we have certain aspects of our application whereby you come in onto the platform, maybe you apply for a loan, and they would ask you what is the purpose of the loan. And from asking you what the purpose of the loan is, actually gathering data. So if every time you come to the platform, the purpose of your loan is for medical care, we can actually find a medical solution for you, or medical insurance, or package that will actually be a lot cheaper than paying on demand. So those are the areas that we touched on when we're looking at the benefits. We're looking at scalability of the SACCOs as well. Do they want to remain small? In most cases, no, they want to grow, but basically without automation or some kind of application, it's really, really hard for them to grow as fast as they want to. Thank you.
Well, thank you, Mr. George, for taking us through the benefits of SACCOs in expanding into fintech. But I'd like to ask you, since we've talked about the benefits, let's talk about the biggest challenges that SACCOs and cooperatives face in Africa when implementing fintech solutions, and how do you think we can overcome these challenges?
Sure. Okay, so when we're looking at these SACCOs, I mean, they range in volume, and they range in maturity and obviously size. When we're looking at the way they operate today and how they've been run traditionally and what the people have been used to, and the evolution of technology and how that's actually swayed their ideology behind running the SACCOs and how they want to progress. So I'll put them in two categories. We have the larger SACCOs. These are the deposit-taking ones, highly regulated and quite liquid in that sense. People pay to join these SACCOs. You buy into the shares, which is why dividends are actually dispersed at the end of the year or end of the said period. And basically, these are institutions that can actually morph into retail banks with the right automation and the right capitalization. However, there are benefits behind staying as SACCOs, which the members actually subscribe to. So for instance, you can have a SACCO of farmers, where farmers will come together, sit down and think, oh, we need mechanized equipment. So they might need tractors, processors, they might need warehouses for storage, etc. However, they don't have the capital to do this. So they come together collectively, start a savings group or co-op, and in numbers, you have more power and more bargaining power as well. So we can go to a leasing company and say, you know what, we can actually link you up with a leasing company and say, we can lease you tractors and you pay back over time using your collective savings as collateral. And that appeals to them more than anything else, because you're looking at the commercial value behind it and how they're adding value to their ecosystem. So that's one of the divides we're looking at. We're looking at the digital divide, whereby some of the demographic we're dealing with in the grassroots do not actually have access to a computer, a smartphone, or even a feature phone. So how do you service them? What's been great across Africa now, and from my studies, what I've observed, is the fact that digital penetration, mobile penetration, and internet penetration has actually gone way beyond where we expected. So in some parts of Africa, for instance, I use East Africa as a prime example, everybody's used to mobile money. It took Safaricom to come up with a product, M-Pesa, and the adoption rate was absolutely brilliant across board. I mean, I go to Kenya quite a bit myself. Myself and my colleagues go to Kenya, and I can tell you in most cases, we get by on a cashless basis just because we have access to M-Pesa. So they don't care if you're taking a matatu on the streets or you're buying groundnuts down the road from the local vendor. It's acceptable almost everywhere. So that alone has actually enhanced financial inclusion significantly in that region. So we want to see more of that across Africa. West Africa, I think some resistance has been put up in that respect in terms of the adoption. And I think in West Africa right now, I think Ghana is actually leading the way. I was at a conference not too long ago, and there was a participant from Ghana who told a story about MTN and how they went into Ghana and how the sensitization that went into their mobile money adoption. And right now, I'm not sure how far these stats are, but they were very impressive. They claim to have over 90% financial inclusion in Ghana right now, just due to the adoption of mobile money and several other fintech apps. So those are the positive sides to it, but yes, there will be some resistance. And the other thing is risk as well. Some of the members, whether they will adopt it, whether they're going to put up resistance against it because it's not something they're used to, or the sensitization wasn't done properly. But in most cases, they will come up to you and they'll ask certain questions that, oh, all this data you're collating on your platform, are you going to steal all my members and bring them to your own SACCO, or are you just a service provider? And just to get the record clear, we are a service provider. We do platform as a service or software as a service. Then one of the other challenges around this is regulatory compliance. In Kenya, again, I use an example. When we went into Kenya, we actually went to the regulatory body that looks after SACCOs. It's a body called SASRA. And basically what they do is that they ensure compliance across the board when it comes to SACCOs and co-ops. So whether you're going to register as a co-op and whether it's for verification, and it's actually quite good because even for new members, if a SACCO approaches you or comes to market you in some sense, and you're wary about their operations, you can actually go on the SASRA website and check the validity of that SACCO. So it gives you much more comfort in that respect. Then also what we, this is my final point on this matter, the change management that needs to be adopted by the SACCOs themselves, whether they're ready for digitization, whether they're ready for automation or not. Some of them actually really do feel more involved participating in the manual aspects. They like the person-to-person feel about it. But when you bring in automated systems and what have you, they're not thinking about the value proposition you're bringing to the table, not thinking about the advantages of using a system. In some cases, they think about the costs. How much is it going to cost them to run this system? Because their members have put money in as share capital, and they're not willing to invest this money in technology because they don't see the need. However, as they scale, they will see the need, they'll see the benefits behind using an automated system and a system that can give them real-time information as well. Thank you.
Thank you very much, sir. You've talked about the benefits and the challenges of fintech in SACCOs, and that's quite understandable. But let us look at it this way. Let us just deviate a little bit. How do you think fintech can create the need to maintain member trust and confidentiality? In essence, fintech can it help SACCOs to maintain member trust and confidentiality that is very key in SACCOs and cooperatives?
Thank you. Yes, trust is one of the ultimate things that people would actually want to resonate on when joining a SACCO or co-op in any extent. So I'm saving money with you. Can I trust you to bank my money? Can I pull my money out with adequate notice? Or in the case of an emergency, can I access credit? And so on and so forth. Those are all the things that fintechs have actually made way more efficient and made way more attractive to members of SACCOs and co-ops. So what we're looking at is traditionally, and this is part of the research we actually conducted, traditionally I would come and apply for a loan, I'll put in my application, they'll look at my credit history, they'll look at my savings history, whether I'm a regular saver, whether I turn up to meetings regularly, my attendance is taken into cognizance, my length of service within the my length of service within the co-op is also looked at. Then further down, they'll drill down further into small clusters of groups. So the cluster within the group would be 3 or 4 people that can actually vouch for you or stand as guarantors for you for the loan. And all of that was done manually. Everybody that had to be contacted, they had to respond, they had to put in their written applications and their approvals and what have you. And that could take anything from 3 days to a week, depending on the response. Or they can tell you, they'll give you a decision at the next general meeting. So the fintech platforms have actually helped eliminate all of that paperwork and the bottleneck behind the decision making and the processing of such applications. Also provides you with a real-time feedback. So with an automated system or an application like ours, you'd go on there and basically you can do a pre-approval of your loan. You can go on there and say, oh, let me check my credit score, because all the loans that are being provided on the ecosystem by the lenders on our platform who are registered and licensed, I need a credit score of 5/10 or 6/10 to apply for this loan and get it at the offered interest rate, which is taking into cognizance the risk element of it also. At the same time, on the platform, to cover the risk even further, we have insurance partners. We have credit life insurance on these platforms, which are embedded into the packages as well. So you come to our platform and we like to kind of distinguish ourselves from the fintech pigeonhole, because we're software providers and we're also an ecosystem where we provide services on behalf of other financial service providers who are licensed and regulated. So you do have the dark side of fintech as well, whereby you have what we classified as loan sharks. And when we talk about loan sharks, we're talking about apps whereby they don't have the right ethical behavior, in my opinion. Anyway, when we say this, I'm talking about the rogue or the predatory lending that goes on, and it's being quite prevalent across the continent, and not just in Nigeria, but I've seen it in other places as well, whereby people have gone on their platforms, applied for loans, and what they don't realize at the time is that when you do agree to those terms and conditions, you're actually agreeing to give up your contact list and in some cases your access to your photo galleries. These are then used against you if by any way you default. Threatening emails go out, or threatening SMS messages will go out to your church congregation or your brothers in the mosque. And basically what they're trying to do is to shame you into paying back quickly at a default rate. So we've seen rates go from 5% a month, compounded up to hundreds. And for us, when we're looking at financial inclusion, this is extremely discouraging. So without the right financial literacy or the workshops or the sensitization around these, we kind of frown upon those kind of apps that are also classified as fintechs. But to us, what we actually concluded was these are loan sharks and they're not providing any kind of economic empowerment whatsoever. Thank you. That was my final point on that. And I think we can delve into other areas as well as we move along.
Thank you very much, Mr. Olusegun George. Thank you for taking us through that point. That's quite very interesting to note. for SACCOs and fintechs that are watching us at this point in time. But let's talk about how do you think SACCOs in Africa and cooperatives rather also in Africa can leverage on fintech solution in effective and sustainable way in a long term?
So for the future, leveraging of technology will definitely help. It helps in terms of scalability, helps in terms of efficiency, and a lot of these apps are only going to evolve to meet the demands that keep coming through. So it's like normal basic mobile phones that we had back in the day. You know, back in the day, you had a mobile phone, you could make calls with it, you could receive calls with it. Later on, they added text messaging, they added photography, video, chats, live chats, etc., etc. And they also increased the capacity of the phones in terms of memory and data storage and what have you. That's going to happen with the SACCOs as well. Sooner or later, some of the larger SACCOs, like I said, that are deposit taking, will eventually morph into regular banks, either microfinance banks or even retail commercial banks, because they're that big. Some of the smaller ones, the ones that are fully manual right now, will be forced to adopt technology. And when I say this, I'll be more specific on this. When we're talking about growing the SACCO movement itself or the co-op movement itself, the average Gen Z person out there would say to you, oh, my mom or my dad belongs to a SACCO, isn't that for old people? And that's what we found out from conducting research. But if we make it more attractive, like I said, there may be people from all sorts of walks of life that could join SACCOs. And not to say that, you know, that would compete with banking services or formal banking services, but it's just an alternative investment route that people could take and say, you know what, I want to join this SACCO, because SACCOs are actually formed for a number of reasons. So I know of people, for instance, across the continent that join SACCOs because these SACCOs are into real estate, or they buy land and develop further down the line, or maybe they're into farming, they're into fishing, or any kind of artistry you can think of. They come together because they have a common interest or common goal, and when they do come together, they look at the possibility of joining this SACCO, what this SACCO has done in the past, and if they grow their membership, the potential of these SACCOs, how they could be. We've come across a couple of those on our travels as well. It's actually a women's group, to be precise. And in this women's group, they had a mantra of saving $1 a day. They had a membership of 1,000 members in the first year, and eventually this small group grew into like 5,000, and they were able to purchase hectares of land to go into farming. After they concluded with their farming project, they grew even more because people heard of this and more members joined. They grew their membership to, you know, into the tens of thousands, and came back and said, you know what, how about as women, we want to start owning our own properties. Let's build an estate. So on that land, we also linked them up with an affordable housing developer, and they were able to build bungalows across that land. And it gave the women such a sense of empowerment and independence that word got out about this as well, and they were actually inundated with applications for membership. But at this time, we're talking about, they actually didn't have a platform. So they're forced to use a platform to automate all their practices and store their data, etc. And now they're flourishing on their own. So it gave them that sense of empowerment, that sense of independence. And women have been very much disenfranchised when it comes to financial inclusion. And the formal banks and the formal financial service providers had done this in the past subconsciously and hadn't really done much about it. But now I'm seeing some commercial banks out there, some of the SACCOs that actually do favor women or put women in the forefront. The funny thing about that is from conducting further research with some of the lenders out there, they told us that these women groups are much better when it comes to retention, when it comes to repayment on loans, and their default rate is next to zero. So that's one of the advantages of working with a SACCO and marrying the two. So collaboration, I'd say, between the fintech companies and the SACCOs or the co-ops is absolutely key.
Thank you for telling us that there is a need for collaboration, and definitely I agree with you that that is very key for SACCOs and also for fintech. But let us talk about the misconception or misunderstanding that SACCOs and cooperatives have about fintech, and how do you think we can address this?
Sure. The misconception actually comes from lack of awareness, one, and education. When we say education, we're talking about financial literacy, running workshops, whether it's from the regulatory side of things to the financial service providers themselves. A lot of the technology out there at the moment is being adopted very quickly, and basically we just need to focus on providing more use cases around what's the benefits of using such technology or fintech platforms can actually provide to the SACCOs. So they have to see it as a win-win situation whereby, you know, I've been to some of the SACCOs and they're like, oh, the women here don't like computers, they don't use their phones, they only use it for M-Pesa and to make phone calls to their families, etc., etc. But in some cases, we actually had to localize the USSD messaging into Swahili and some other African languages to say, you know what, if you can use this, it's a number system, you don't only have 5 features on there, and basically the use cases increased dramatically. So we're happy about that. We also run a lot of workshops, and when we do workshops, we actually go out and partner with other financial service providers to actually initiate them into other service offerings that we have within the ecosystem, such as insurance, healthcare, affordable healthcare, affordable housing, and even investments are coming on board now. So we're talking to people who provide investment packages. The pension partners that we're talking to at the moment as well. A lot of the self-employed artisans or the small business owners do not even know what pensions are. So in some cases, we've actually had to go out and tell them that you would realize that at your age, you need to have some kind of backup plan, or you need to have some kind of safety net when it comes to your income and your livelihood. So yes, the health is well on one side, and also we look at the pension savings schemes and other investment schemes that you can also get into as well. Thank you.
Thank you very much on that. You touched on the basic points that we need to know on that. But let me also ask you, you've talked about regulations when you started. How do you think we can work more, or what do you think regulators can do also to help SACCOs and cooperatives adopt fintech solutions?
Sure. So when we talk to the regulatory bodies across board, what we looked at was collaboration, basically. So we want collaboration between the fintech providers, the SACCOs, and the regulators to say, you know what, if there are new policies that you need to adopt or you need to roll out into the general public or across the industry, we need to be aware of that also. So we attend meetings, regulatory meetings, we attend co-op meetings periodically as well, just to be in the know of what's going on. Sasha do a good job of having a website where you can actually go there and see if there are new policies that need to be adopted or we need to be aware of. And very quickly, we have to swivel and adopt those policies and also configure them into the platform if they're not already there. The SACCOs themselves also need to communicate this to us as and when they want these implemented or how it's going to affect their operations, etc., etc. So yes, we're very much aware of that and we're carried along. So that participation is actually key in terms of the collaboration that is afforded to us to keep us in the know, one, and also for the SACCOs to stay on top of their game and not get caught out and fined or suspended from operations in any way. So that's the collaboration is key in that respect.
Thank you. Collaboration is key across board, whether with regulators, fintech providers, and SACCOs. That is very important to know for everybody. But let's talk about the competitive landscape that is evolving for SACCOs and cooperatives. More fintechs and startups are entering the market. How can these organizations stay competitive while still maintaining their unique value proposition?
Sure. So the fintech landscape is a very interesting one. As you mentioned, it's very competitive, and through competition drives more innovation, better systems. It allows you to actually go out there and think even more about the service offerings you're providing or bringing to the market. It makes you reassess your value proposition in general around that. I mentioned collaboration, and basically we as a company have actually collaborated with several fintechs that thought we might have been competition, but we're actually more complementary to one another than competitors in that sense. So yes, we do partner with, I mentioned a number of fintechs that are out there in insurance, whether they're pension fund providers, whether they're healthcare providers, but all within the fintech space. But how do they see one another, and how do you market to a SACCO that you have no relationship to, if not for collaboration? So rather than look at the competitive landscape, I look at the complementary and supplementary services that could actually be accessed or used across board when it comes to the ecosystem and how people benefit from the ecosystem. The savings and co-ops will continue with their normal practices, but we just bring enhancement to their efficiency, to their scalability, and like we said, the real-time solutions that we bring to the table, which comes to decision-making and access to data, and also the data analytics that we also provide, helps them make more informed decisions, helps them drive efficiency even more. It can drive their membership drive as well, because basically you become way more attractive if you're automated than if you're just running manual processes. Like I said, if you do want to appeal to the younger generation, you do have to adopt technology. There's no way around it. Some of them might join, but more of them will join if they can use an app. You know, I've spoken to young Gen Zers, and even the traditional banking, the formal commercial banking and the retail banking format actually frustrates them more than anything. I mean, taking a youngster into a bank now to queue for hours just to withdraw an amount of money just seems bizarre to them. So if you can't do it online and you can't automate your processes, there's no way you're ever going to appeal to them. Thank you.
Thank you, Mr. Olusegun George, once again. If you're watching us live, please, if you have questions, can you just drop them, whether it's on Facebook, YouTube, or LinkedIn? You can drop your questions and we will attend to it. Mr. Olusegun George is still here for the next 15-20 minutes thereabouts. We should be rounding up on this podcast. Mr. Olusegun George, pardon me for saying Shegun. I think I'll try my best to maintain Olusegun. Okay, Mr. Olusegun George. There's some SACCOs listening to us right now, and possibly they're new SACCOs thinking of having fintech solutions, but they are unsure of where to start or how to prioritize. Please, can you give them a source of advice on how to go about this?
Sure. Yeah, so the change management we mentioned earlier comes into play here. And when we're talking about change management, we're talking about just not your customers, but even internally, what your management and your executive team actually think, and their adoption rate, and also their attitude towards change, whether it's technological or otherwise. So what we're looking at is how do you win those, how do you win them over? And that's the first step they need to embark on. How do you win over the management, the executives, and the members to say, you know what, we're automating these processes and these are the benefits behind these processes. I mentioned the value proposition. The value proposition has to be attractive to both sides, and it has to be a win-win situation for them as well. What they're not looking for is basically you coming to impose automation on their existing practices, because for some of these SACCOs that conduct themselves manually, that's actually their livelihood. They go around, they attend meetings, they take attendance, they listen to grievances, they listen to ways to improve the efficiency of their operations, they do the administrative aspects of it, and they like that human interaction in general. So the automation of these processes or technology in general will take some of that aspect away from them. But with a platform like ours, it actually doesn't, because you can actually conduct your meetings either using our platform to store your minutes so everybody's aware of what was said and what decisions were taken within your meetings. You can use it for attendance. And obviously, like we said, we do credit scoring within that. So there's a host of benefits that you could actually benefit from using a platform like ours that's so robust that it actually also almost becomes a super app. You know, you're going on there not just for the lending aspect, but you're actually going on there to monitor your own well-being, your financial well-being, whereby you can see your balance on a real-time basis. You can actually check what your credit score is. You can actually see their offers on there, because we also have like retail partners, for instance, and that give offers to our members or our users on the platform to say, you know what, Just Right supermarkets, for instance, are doing a promo on this. If you're a member of XYZ SACCO, you actually qualify for this as long as your credit score reaches the optimal level. So there are offers like that and other services within the platform that you can benefit from. So those are the kind of value propositions that should be driven home when it comes to the SACCO heads or the executives within the SACCO, trying to convince their members to say, you know what, going forward, we're going to be automated, and these are the benefits of being automated, and this is how you can benefit from them. So yes, in that case, the adoption might be a bit slow. However, when we're looking at it, another big contention with them would be the investment in technology. How much is it going to cost versus how much or how beneficial this is actually going to be to them in that sense. So yes, in some cases we've spoken to some of the SACCOs and they'll be like, oh, you know, we're only a small SACCO, we're 1,000 people, and we're still managing with our manual ledgers and spreadsheets in some cases. Some of them only have written records, which are manual ledgers, are handwritten. So again, it gives me an opportunity to sell the value proposition to them to say, you know what, this book that you carry around acts as your ledger, your register, and everything else. What happens if it got lost? What happens if it got destroyed in a fire? Do you have a backup? And in most cases, they don't. However, if you have an application or you have technology, you can actually back up your files, and our system resides in the cloud. So disaster recovery and all of that is taken into cognizance as well when designing the system. So those are some of the advantages of having an automated platform or application to actually run the SACCO or the core. Thank you.
Thank you very much for that. You mentioned something about cloud, and I think that's something we need to talk about a little. Most SACCOs don't understand what it means to have cloud. How can you use this forum to explain to SACCOs listening to us what you actually mean by cloud and how this can be beneficial to them and their services?
Sure. So in that sense, once you get automated, you're going to have to store your data somewhere. In some cases, primarily it's stored on a device, and secondary is going to be stored in either a tower or a data center. depending on the maturity of the organization as well, or the co-op. You can have a data center, all of those things. However, you have to have some kind of backup in case of incidental occurrences that may occur to disrupt your operations, and you have to protect your data. So data protection, I'd like to touch on that very quickly. Data protection is one of the key elements why automation is beneficial to SACCOs. When we say data protection and data privacy is stored in a way that, you know, it could be encrypted, it could be, it's not going to be abused in any way, it's not going to be sold to third parties without any consent. And the regulators also help with that as well. So you have to comply with the regulation when it comes to data protection and data privacy in that sense. When it comes to disaster recovery, yes, what's your backup plan to say, for instance, if my primary data was on my laptop and my laptop got corrupted, how do I access this information? Is it backed up anywhere? And even if it is backed up anywhere, is it safe in that location? And that's where the cloud technology comes in, and that's what a lot of the apps today or the fintech companies actually rely on. They want that redundancy, they want that backup, they want that assurance that their data is safe somewhere and won't be abused or manipulated in any way. The audit trails on this platform also help you monitor whether your data has been manipulated in any way, or if there's any occurrences that you didn't authorize in that sense, or your data has been breached. So basically, we're aware of those. We have stringent security measures within our company as well, experts on my team, when it comes to cloud technology and data security as well. So most of the fintechs will also follow a similar pattern, but I'm talking from our standpoint and how safe your data is wherever we store it in the cloud. We use a recommended cloud storage company, and there are several other ones, but what we feel comfortable with is something that's going to be on a global scale, and it's going to provide us with the kind of comfort and security that we need to operate as well. Thank you.
Thank you very much. Let us talk about the ethical considerations for fintech, for SACCOs who are trying to adopt fintech solutions. What are the ethical considerations that they should keep in mind when going for fintech solutions?
Okay, so basically what you want to protect your data, and you also want to maintain the trust of your members. So basically your members are thinking, okay, we've been operating for decades now, and we're comfortable with the manual operations we've been conducting. However, we're moving to this technological age whereby the fintechs are coming into play, where part of these fintechs we're subscribing to multiple platforms and what have you. How safe is our data, and how can we ensure that our data isn't being abused in any way? And that comes as one of your disclaimers on the application itself, and it also comes with your compliance in-house and your regulatory compliance as well. We want to ensure that none of those compliance regulations are breached in any way. We're protecting your data. We're making sure that the regulators are also doing their job, and the regulators are also able to have oversight over how we conduct our business as well. And basically, if you do want to operate in this space, just bear in mind that, yes, you are regulated because you are within the financial service sector, whether it's informal or formal. And if you are providing those services, you want to make sure that you're actually going to comply with any such regulation and not abuse the trust of the users of your platform. So that goes across board. You're trying to sustain the trust with the organizations and the end users as well.
Thank you. Let us talk about what concerns us majorly, and that's financial inclusion. What impact do you see fintech solutions having on financial inclusion and access to financial services for underserved populations in Africa? And how do you think SACCOs and cooperatives can contribute to this goal?
Okay, so as a company, when we did the research and we used all sorts of metrics and what have you, but we settled for the World Bank definition of financial inclusion. When we looked at the numbers across Africa, estimated 400 million adults are financially excluded. And when we say financially excluded, there's a whole different measure or metrics that we need to look at. Classifications of people who are also classed as financially excluded because they have no benefit, they have no access to financial services. Some people have no access to credit. Some people do not have a formal banking branch within 10 miles, in some cases 50 miles of where they live. We've been able to bridge some of these gaps by using the agency network. So across Nigeria, for instance, across Kenya, you'd see kiosks all over the places, POS providers, and agency network partners across board. So they've been able to penetrate some of the areas that were neglected in the past by the formal sector because they wouldn't see it as profitable to actually go and set up a branch and just become a cost center somewhere. So it didn't make financial or economic sense to them to go and build a branch in the middle of nowhere. Also, we have to look at other factors. Do they have internet penetration in those areas? Do they have mobile accessibility in those areas? In some cases, no. In some cases, they even don't have, they don't even have access to electricity. So those are some of the factors we have when we're looking at financial inclusion and how to really bridge that gap. Lots of fintech companies have actually gone way and beyond what the formal sector have done by going into this demographic. We went into the grassroots ourselves and conducted some of these workshops that actually enabled us to sit down with them and think, you know what, if you guys can
no choice but to rely on informal moneylenders, friends and family, and the proverbial mattress to manage their household economy. But Jean Kabongo on a mission to change that by providing the poor with access to Finca, a global microfinance that offers an innovative service known as agency banking.
Aujourd'hui, ce travail est devenu ma passion. Ma passion dans la mesure où, au moment où on commençait le agency banking, moi-même je ne comprenais pas quoi est-ce que ça allait donner.
Rather than build brick-and-mortar bank branches, Finca Express provides financial services through a network of trained agents who operate out of their own shops and businesses.
Mais avec Finca Express, nous disons que le modèle d'affaires, c'est celui de pouvoir utiliser un canal transactionnel, un canal d'acquisition de clients qui soit le plus moins cher possible par rapport à nous.
Must have a stable business in a stationary location with enough cash on hand to support banking services.
De faire les retraits, c'est facile, hein? Quand vous venez à n'importe quel montant, on va vous servir, il n'y a pas un problème.
Establishing financial services for those living in poverty can be a challenge. Early on, Finca had to figure a way to identify account holders in a country where many people lacked ID cards. So they came up with a high-tech solution that many developed countries have yet to adopt: the digital fingerprint. Customers simply scan their finger, provide their bank account number, and withdraw their money.
Finca est en train de servir la population la plus pauvre, plus démunie. Et nous avons même des clients qui sont analphabètes. Et donc, ce que nous avons voulu, c'est de rendre les services beaucoup plus simples et beaucoup plus utilisables par tout le monde.
Another incentive: there are no transaction fees, so customers are able to make small, frequent deposits without penalty. Patrick Bismana makes under $90 a month working in a soap factory. Yet he deposits money into his savings account every week. In Kinshasa, as in many places, the poor save money by forming groups and paying a common fund each month, then taking turns withdrawing big purchases. The practice is unregulated and can often lead to theft and conflict. Safety is another benefit that Finca provides its non-traditional clients. Having a Finca Express location nearby reduces the risk of theft. Seraphine Moulet is a kindergarten teacher who sells a variety of goods for extra income. When her all-woman sales group applied for a loan from Finca, they received 2 weeks of business training, as well as the money. Customers aren't the only ones whose lives are improving thanks to Finca Express. Agents like Diego Tuaca earn extra income through commissions, and belonging to the Finca network also increases traffic to their own businesses, improving their revenues.
Et après, la remise doit reconsidérer en mettant la monnaie que non, tu peux aussi mettre beaucoup d'argent, mais pour disponibilité, tu as pour la machine, pour amener une évolution. À ce moment-là, c'est pas plus en Finca.
Agents earn a percentage on the volume of transactions made per month. So attracting more customers is essential for Finca sustainability.
Et donc, au moment où nous commencions les Finca Express, Finca n'avait que 70 000 à 80 000 clients. Mais aujourd'hui, en termes de ceux qui ont l'épargne, qui ont des comptes d'épargne avec Finca, nous en comptons plus de 150 000.
Every week, Finca holds marketing drives across Kinshasa to get the word out. Each event yields about 50 to 100 new customers. Most have never used a bank before. At age 54, Eliza Bakutima opened her first ever bank account with only $1. She is hoping to save enough to buy a piece of land someday. With a business model that's sensitive to the needs of the poor, Finca is providing financial services that can improve lives.
Il n'avait aucun espoir sur son avenir. Mais ayant été convaincu par nous qu'il peut commencer à faire des petites épargnes en utilisant Finca Express, cette personne met un peu d'argent de côté, aujourd'hui qui s'est constitué un capital, qui achète sa marchandise, qui commence à vendre, qui paye les minérales pour les enfants et qui a la possibilité aujourd'hui de trouver une maison. Je crois que c'est grand.
We're back into the studio. Good morning, everybody. Wherever you're watching us from, across the continent of Africa, globally, whether in the United States and the Asian countries, you're welcome to our FinTech Podcast Africa. The topic this morning on our channel today is overcoming challenges, exploring the obstacles and solutions in scaling agent banking across Africa. In this episode, we're going to talk about the world of agent banking in Africa and explore the challenges faced by organizations in scaling this innovative financial services across the continent. Agent banking, with me, has emerged as a powerful tool to bridge the gap between traditional banking services. Will these obstacles that hinder the expansion of agent banking and uncover potential solutions to overcome these challenges? Join us today as we shed light on the transformative potential of agent banking and its role in promoting financial inclusion in Africa. With me today in the studio is no other person than Mr. Olojo Victor. Mr. Olojo Victor, you're welcome to Africa FinTech Podcast.
Thank you very much for having me. It's always a pleasure to be with you, and thank you for the great job you're doing to promote financial inclusion across Africa.
Thank you, Mr. Olojo. We've been on this journey for quite some years now, and I want to use this time also to appreciate what you're doing because you picked this up at the very earliest stage and you've never dropped it. So if no one celebrates you, I just want you to know that Africa Fintech podcast celebrates you.
Thank you.
Financial Inclusion Africa celebrates you.
Thank you.
Thank you very
Thank
much.
you.
For a start, Mr. Olojo Victor, can you just introduce yourself?
Okay. Thank you very much. So again, my name is Olojo Victor. I am a financial inclusion enthusiast. I currently serve as national president of the Association of Mobile Money and Bank Agents in Nigeria. I'm very passionate about financial inclusion. We've been at the forefront of financial inclusion since the early days that the CBN actually spearheaded by releasing the framework, for financial inclusion in Nigeria. So as early as 2011, 2012, we've been working, very closely in terms of agency banking, mobile money, and all the other efforts to actually deepen and drive financial inclusion in Nigeria. I'm very passionate about um, opening account, activation, credit. It's, you know,
I think we're losing Mr. Olojo, but we'll get him back into the studio. We're sorry for the technology challenge. We'll get Mr. Olojo back into the studio soon. Welcome back, Mr. Olojo. Hello, can you hear us, Mr. Olojo? We just want to be sure you're back into the studio with us. We can't hear you, Mr. Olojo. Mr. Olojo? Let's hold on for this interlude. Hello, Mr. Olojo, are you back with us? Hello? We seem to be having a hard time. getting Mr. Olojo back, but we'll work on it. Hello. Hello, Mr. Olojo, can you hear us now? We can't hear you, Mr. Olojo. We can see you, but we can't hear you. Okay, we'll take a short break and we will get back again. Thank you, everyone, for holding on.
Okay, I don't think I can hear you
Okay,
now.
Mr. Olojo, thank you.
Better.
Okay, we got it back again. We got it
All
back
right.
again. Thank you so much. Our viewers and listeners, sorry about that. Sometimes we don't have technology under our control, but it's also good that we can also fix it anytime it happens. So, Mr. Olojo, over to you. You were introducing yourself actually when we had the technology issue. Can you please start again and introduce yourself so that our viewers back home can get to know you?
Okay, so thank you very much. I would take that again. My name is Olojo Victor. I currently serve as National President for the Association of Mobile Money and Bank Agents in Nigeria, AMBAN. I also run my business. I'm very passionate about agency banking. I run agent network management company. Um, I'm passionate about adoption, about credits. I'm also very passionate about the informal market in Nigeria. We've been in this business or in this duty since the very early days of financial inclusion when the CBN released the framework, for financial inclusion as early as 2011, 2012. And so far, so good.